Let's talk about what to look for when it comes to rejection. Now, when the market pulls back to a supply or demand zone, we just don't jump into the trade. I talked about in many videos about the market as it retraces back to a zone and we get the closure of a candle into the zone and the market kind of pulls deep into that zone, whether it's at a supply or demand area. That's a clear sign sometimes that they want to continue moving or through that direction or through that zone, right? Not all times, but what we want to see in specific too is where they retrace back to a zone and the candle that taps the zone, say for example, doesn't close into the zone. We want to see it reject with the wick and pull away from the zone, right? Especially when we move down to our lower base chart and are looking for a sign to either go short or long at a zone on the lower base chart. But here on this channel, it's strategy and how I trade pretty much. I like to use, I'm always looking for confluence. I'm always looking for, I'm marking my zones up either at a higher base chart using supply and demand and then moving down to a lower base chart. Okay. So it's all about chart confirmation, chart confluence, and looking for the best opportune entry point. Okay. So what we see here is that the market went up here. Of course, it grabbed this area of liquidity here, okay? And then it broke structure below, okay? I talked about the liquidity sweep or liquidity grab, then breaking structure and pulling back to a zone. In this video here, I want to focus in more so on the rejection portion of what we need to see when it comes to a trade. When we know to get in the trade. When do we enter into a trade? All right. So if you notice right here, we broke structure below. The market pulls back. Again, this is on a higher base chart here. We're on a 120 range chart. So when the market finally pulls back to our supply area right here, we want to move down to a lower base chart. Now, what we can see clearly here is that when the market did retrace to the zone here, we can see that it did what? Let me redefine this zone a little bit better here. Okay. All right. We can see that it tapped the zone. It didn't push into the zone here, even on a higher base chart, and close into it. So, if I go up here and I grab this arrow line, we didn't see it dig deeper or pull back deeper into the zone. It came right here at the zone, and we see the next candle, which was a bearish candle. It closed to the downside, but it wicked the zone and pulled away. This bullish candle here never closed, meaning closed into the zone. It actually tapped it, gave us the tap we need on the higher base chart, tapping into the higher base zone, supply zone. The next bearish candle, it wicked it and moved away. This is the kind of thing that I like to see right here because it's a clear sign of rejection. Now, if we move down to the lower base chart, okay, we want to find or identify the entry point based on the rejection at a lower base zone. So this is what it looks like. I'm on a 24 range chart now. This will be the chart where I would, enter into the market looking for rejection. The bigger box here for all those that are first time viewers here on the channel, I trade supply and demand. And I'm looking for chart confluence. I'm looking for multiple confirmations within the market to give me the the sign that I really need to go short or go long if we get the rejection. Okay, I don't take my trades just off of a higher base chart. I want to mark up that higher base chart again and then look for a sign or rejection when the market pulls back to a lower base chart zone. Okay, so the larger box here, the larger rectangle box, that's the 120 range zone that I drew up right here. Okay, supply zone. And then I move down to my lower base chart. Once we pull back, okay, retrace back and tap into that higher base zone. Again, we got a breaker structure, beautiful area where the market broke structure to the downside. It pulls back to this higher base zone. Once it does that, then I just move down to my lower base chart and look for a supply setup. Lots of times you'll see where the market pulls back to a higher base zone on a higher base chart. You'll see where there may be a smaller zone, okay, within the higher base zone, and that's confluence right there. Higher base zone, lower base zone, two supply zones within the same geographical area. Then that's going to kind of, give us the confluence we need, especially if we get the break and close of the candle in the opposite direction to go short. Now, one thing I also want to see is when the market pulls back into the zone, when it pulls back to the lower base zone, it taps into it. Did it start wicking away from the zone, or did we get breaks of close and closures of candles into the zone? In this case here, we get where the market pulled back to the zone here, as you can see, and we get these small wicks. It's kind of hard to see here because, this is a lower base chart, a lot of activity there. But if I blow it up, you'll see it right here. We got the tap right here into the lower base zone right here. The bearish candle, the next candle gave us a wick. We did get a closure of this bullish candle into the zone, but it never broke above that bearish candle. So that's still a sign of rejection in a sense, because we didn't get a break and close above. Okay, so it wicked the zone. Bullish candle here. Next candle that forms is bearish. So at this point, all we're looking for is rejection. Is it going to continue pushing higher and give us a break and close of a bullish candle inside the zone? Or is it going to reject with these wicks away? We got a wick here, bullish candle, never closed above. Okay, we get a wick here, this next bearish candle here. So once we get a break and close of the last pretty much up candle or bullish candle right here, so we're gonna get a break and close below here at 18,556.5. You go short. It's that as simple as that. Multi-chart confluence. We're looking to make sure. One of the clear signs is to see if the market is wicking at the zone and not closing into the zone. If it wicks at the zone and moves away from it, then that's a telltale sign that they want to continue moving in the same direction. In this case here, they broke that structure on a higher base chart and they pull back to a zone, and they still want to continue pushing to the downside. So the wicks at the zone gives us that confirmation we need to enter to go short. All right, enter our trade in the short direction. Okay, so that's what you want to see. Again, marking up a higher base zone, then a lower base. When it taps into the higher base zone, look for in this case here, a supply setup. Everything is in reverse of when it comes to a demand setup. But, squeezing this together, you can see where it came back. It's tapping that higher base zone. It's also tapping a lower base supply zone right there. If we go over to, I'll show it to you right quick. I'll blow it up. This is a supply zone off the 24 lower base chart. Okay, push down, made a low. Made a, it had its high right here, but it broke in structure to the downside, breaking below this low right here. This is a swing, okay, where there was supply, okay, meaning aggressive selling to the downside. If you don't know, much about supply and demand, you're in the process of learning. That's what supply is: aggressive selling. Demand is aggressive buying. Aggressive selling that pushed down and broke below this area. Now the market could have came back up here as well and tested this area here, but this is a mitigated zone where there's no gap at. There's actually I believe, let me see, I'm gonna blow this up a little bit. Okay, so this here is actually a low probability lower base chart zone, okay? But on the higher base chart, okay, as you can see, this is a high probability supply area, okay? So even though we have a lower base zone on the lower base chart, okay, meaning a low probability zone on the lower base chart, the market is still tapping into a higher based high probability zone, okay? All right, so if we got a higher zone, higher base chart zone, or a higher time frame zone where it's unmitigated, hasn't been tapped yet, that's going to, you put that into more precedence over the lower base chart, okay? So being that we have this gap here resting back at this higher base chart zone, okay, we have a gap right there. It's higher probability, so that means the market's more likely if it taps it, we don't get the break and close into it, but we get the rejection where it starts to wick away from it. It's going to continue probably moving in the same direction. Then we just wait for the setup to unfold when it gets back to that lower base chart. And I know I'm kind of being repetitive with things, but I'm trying to stress it to the highest point so you guys understand. But that's all we're doing. We're breaking this thing down. When it comes to looking for rejection, most people have a hard time when it comes to trying, what are you looking for? The confirmation. Yeah, definitely when the market is wicking at that zone and not closing into the zone, clear sign that you can look to take an entry or enter the market. In this case here, going short or long in opposite of, or vice versa. Okay, simple as that. But I just want to share this with you guys today because people send me DMs and ask the question about what are some telltale signs that I look for when it comes to entering a trade. Whether doesn't really matter the market. Okay, this works on all markets. No trade is going to be 100%, but that's the type of things I look for to give me more confirmation to enter a trade when it's wicking at the zone and moving it in the opposite direction of, okay, or hitting that zone and moving away from it, and then we get the break and close of the candle, then I'm looking to go, short. Again, this is on the NASDAQ 100 futures, and same thing can, follow suits really no matter what market you trade. So just practice it, back test it, forward tested it, to make sure, but you have to spend time on these charts to be able to do so. But wanted to share this with you guys today. So hopefully you understand that. If you want more, insightful details and breakdowns about the trades that I do take when it comes to surrounding the trade, the strategy, surrounding supply and demand, where to place your stop losses, where to place your TPs at, your profit targets, then, you can join the elite membership. I recommend doing that. A lot of people find success because it's kind of like an educational, not say program or class or course. It's just to where I'm real time going over trade setups that I've taken and posted over on the Discord community. Those trades, lots of them, there are tons of videos are already there where I break down the trades as if you're sitting right next to me. So you can grasp a better understanding of what's going on behind the scenes, my mindset of what I was thinking leading up to the trade and even into the trade. What am I looking at? Okay. So it's only $6.99 if you want to join that. You're basically supporting my efforts as a content creator. Okay. It's not a course or anything. That's just my means of giving something back to you as a means of a perk or reward. It's part of the YouTube membership program or tier program. Supporting my channel here and supporting my efforts as a content creator. And I'm giving something back. And lots of people who have enrolled in that program have found much success in doing so. So if you're interested, it's only $6.99 a month. There's loads of trade breakdown videos. I have a video playlist on there as well. So you don't have to watch over, 800 and some videos. I've highlighted link by link the videos that really break down things more in details surrounding the strategy. So if you're interested, the link is down in the description portion of the video right below the Discord link. It says become an elite member. Click on that link. 2 tiers will pop up. Make sure to choose the one for $6.99, and it will give you direct access to the video content there. All you have to do is click on, once you've done that, click on the membership tab, and then you'll have access to those videos. But if you're not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button below so that you become part of the community, so that you understand, so that you can start becoming consistently profitable in trading similar setups just as I do here on the channel. But also make sure to turn your post notification on just as well so you don't miss one of the uploads here. And if you found value in this content, guys, please drop a like on the video. I appreciate it. I'll see everyone in the next one. Have a safe trading day.